Great to have you. Talk to us first about perhaps maybe some of the different shifts that maybe the Federal Reserve is seeing relative to maybe what you're looking at. A lot of people have said that the Fed, it's clear they are behind the curve. How do you think we've gotten so far behind the curve?
Well, I think we are behind the curve. I think that's one of the reasons we've seen inflation picking up. I think the reason is it was a very serious hit to the economy. And it was sort of shocked. But I think, at least for the last 3/4 of a year, maybe longer, it's clear that they needed to start moving. And I think just a little reluctant. They had to see the data, had to look at it. But I think that's really the reason for the slowness. And depending on how you read Jay Powell's statement today, I think they're beginning to see that and take action.
There's been a lot of talk here about the flexibility that the Fed, the FOMC members want to have to be able to sort of look at data, react to it, or in some cases not react to it if they think that it's going to be a relatively transitory here. Do you think that the flexibility as it currently stands with Fed policy is maybe a little bit too flexible?
I think it's off. It's flexible in the wrong direction. I think, if you look at the history of rules, like the so-called Taylor rule, you see when they've gotten off, it hasn't worked out so well. When they're on track, it works pretty well. So that's the lesson. And I think by any measure, they're off track now. And they have been for a while. And so they need to make that adjustment. And I think it would be better for the economy if they make the adjustment sooner rather than later, and smooth and as forecastable as possible. But we haven't got to that point yet, and they're still talking about the future.
But the Fed's new framework implied that it was going to drift away from these sorts of rules. They decided that they wanted to have that flexibility, particularly to overshoot on inflation, to have a more inclusive labor market. But suddenly it's felt that inflation has run too hot, and inclusivity in the labor market perhaps isn't the main focus when indeed the world is upended from a supply chain perspective. Should they never have built in that flexibility? What do you make of the newer framework of the Fed and whether or not it works?
Well, they made this adjustment, this average inflation targeting idea, but you can plug that into a rule and you can see what it implies. And also there's a debate about the so-called equilibrium interest rate, which people call R-star. John Williams has done a lot of work on that. There's debate about that. But even when you put those in, it looks like the rate is too low. And if you assume inflation comes down, it's still too low. And so I think that people have to take into account, it's not one particular strategy or rule. It's a whole set, and the Fed actually publishes these in its monetary policy report, page 44. I wrote it down. The most recent one, they're there, sitting there, the Taylor rule and others, and you can see how they're behind the curve.
What about the structural shifts that have been created from the pandemic? We heard from the Fed chair earlier, and I believe it was last year when he said maybe the natural rate of unemployment, it's a lot higher maybe than it has been in previous cycles. Do you see those structural shifts underway as well?
It's certainly possible, and I think that's what the Fed is banking on. But again, the magnitudes are not nearly large enough to have this rate near zero, as Jay Powell put it. And I think the notion, he used the word twice, very, very strong labor market. That's there. The notion of the federal funds rate is the primary means of adjusting policy. You said that as well. That's part of the principles. So all those suggest that it's about time to be clearer, more systematic about the rate increase. And people are writing about that. I think they're concerned. There wasn't much discussion of that in the press conference, which I watched. But I think people are talking about it all the time. You're seeing it in the Financial Times and the newspapers, Wall Street Journal, et cetera. They're beginning to see that there's a problem here.
But when you talk about the rules that the Fed lists out in its policy report, I mean, they all sort of include, I guess, the employment gap to some extent or another here. With regards to the inflation gap, the gap between expectations and the trends that we see here, can we blame maybe part of the lag in the Fed response to the idea that these were much more supply side issues? They were happening in certain areas of the economy that don't necessarily show up immediately in those sort of headline inflation numbers. Is that a valid excuse?
I don't think it is. We've seen this in the past. That was one of the excuses. raised way back in the 70s. It's the supply side. It wasn't a monetary policy. But I think it is monetary policy because we have evidence that the rate is low compared to what history would show you. Your charts show that. We've never seen it like this in the past, so they need to make an adjustment. I don't think it's that unusual. Of course, the pandemic was terrible and very unusual and still there, but I don't think it's sufficient by any means to justify the near zero rate.
And meanwhile, cost of living prices continue to spiral, particularly the rent side and how much the Fed can affect that. Very quickly, Professor, is there any way they can orchestrate now a soft ending to what has been an economy running hot?
By all means, and I think that's what we hope they will do. They'll begin to make the adjustments. Maybe it'll take more than what's in the cards, which is only like 0.9 by the end of this year. And I think it should take more than that. But if, again, it's advertised, it's clear, there doesn't need to be a contractionary effect. It'll focus on inflation, and that's what the Fed should aim for. The economy doesn't need a downturn at all. That's completely ridiculous. What it needs to be stronger, and it will be stronger if we deal with this inflation problem.